All right, everyone. Good evening. We'll just start the webinar in about 3 minutes or so. I see a few attendees already coming in, so let's just wait for about 3 to 2 minutes and then we can get started as more people come along. All right, folks, I think there are enough people to get started with today's live stream. Let's just make sure that everything is in place. And yeah, I think we're good to go. Hello, everyone, and good evening. Welcome back to another Mudrex live stream. As always, it's an absolute pleasure to connect with you all and the community and dissect the crypto markets. Before we dive into today's webinar, I just want to take a moment to set the stage and also provide some context. Over the past quarter, it's obvious that we've seen the cryptocurrency market face significant downsides and also negative sentiment. If you've been keeping track of things, you'll know that the overall feeling across social media is currently at some of its lowest points in recent memory. A lot of people are actually saying that this cycle is over and that they cannot believe that they didn't, realize any profits from this cycle. Many people are also saying or asking rather, why are altcoins performing like the way they are and that they're never going to go up from here. And honestly, all of this is really understandable. Um, when it comes to Bitcoin, which has long been the centerpiece of the crypto market, it has also had a very rough start to the year. In Q1 alone, Bitcoin posted returns of around -6%. Now, while that doesn't sound like a catastrophic drop, it has certainly dampened the enthusiasm that we saw earlier in the cycle, especially towards the end of last year. In terms of the broader crypto market, this same sort of negative downside has also occurred. At the start of the year, the total crypto market cap stood at around $3.3 trillion. But if we fast forward to today, we've seen that the figure has declined to approximately 2.8 trillion as of this webinar. That's a drop of nearly $500 billion in market value in just a few months. Um, so, with this decline, there has come a wave of uncertainty, particularly many investors and traders that believed that a pro crypto presidency under Trump in the US would actually extend this bull run. Um, this unexpected downturn has led to a very, very crucial question of whether this bull run still is in play or whether it's over. It's a fair concern and one that really deserves to be examined thoughtfully and thoroughly. Um, Here's the thing that I really want everybody tuning in today to understand. Crypto markets have always been volatile, and really understanding these cycles isn't about reacting emotionally to every dip or rally, even. Instead, it's about understanding the data and really identifying the key indicators that tell us a story, that tell us whether we're in a temporary correction or if something more long lasting is unfolding before our eyes, right? So that is something that definitely I want everybody in this webinar to keep aware of. All right. So let's now move on to today's actual agenda. Uh, all right. So I hope you can see the screen. Yeah, perfect. So that's exactly what we'll be covering in today's session. We will be analyzing some of the major data points that can offer clues about the state of the market and some trigger events that could revive the market. Uh, of course, I'll also leave plenty of time at the end for your questions, whether you want to discuss specific projects, technical signals, or simply share your thoughts on how you're feeling in this market environment. I think it's very crucial for you to also voice how you are playing this market as well. This is sort of meant to be an open conversation where we can collectively discuss and understand what's happening and how best to approach it in the coming months as well. So, with that said, let's get right into it and start by really understanding, firstly, why we find ourselves in this position today. Okay, so why is the crypto market down, right? To start out with, one of the major factors has been the introduction of tariffs under Trump's administration in early 2025. These tariffs, which included a 25% tax on Canadian and Mexican imports and around 10 to 20% on Chinese imports, were intended to actually protect domestic industries in the US and address trade deficits. While these measures had broader economic implications, they also have a very noticeable impact on the crypto market. Now, here's why I'll break this down for you. Uh, Tariffs can fuel inflation by increasing the costs of imported goods. Ultimately, what does this do? This pushes prices higher for both consumers and also businesses. This inflationary pressure tends to make investors a lot more risk averse. Uh, they essentially move away from assets like cryptocurrencies. Instead, they often seek stability in other safer investments like bonds or gold. Uh, and as a result, the crypto market experiences significant shift in sentiment once Trump announced the news about the tariffs, right? Another major factor, and this is something that often goes unsaid, but the Bybit hack that took place on February of this year, uh, this incident, I'm sure some of you would know about this, uh, was a significant event in crypto. It was the largest crypto heist. There was around $1.4 billion which was stolen in Ethereum. And it was a dark day. But having said that, the crisis management that the Bybit team actually took in effect was handled impeccably. Uh, and even though this was handled really well, it severely undermined investor confidence. Uh, Trust in exchange security falters, and this puts a dampening effect on users, not just for the short term, but for the mid to long term as well. Thirdly, economic conditions have also played a significant role. The US economic outlook for 2025 showed signs of growth, but Trump's economic policies have created uncertainty again, right? With tariffs potentially slowing growth and driving inflation higher, investments in general have become more cautious. So, this has directly impacted risk on assets like cryptocurrencies. All right. Beyond economic and security concerns, we also need to address a very important factor that has emerged directly within the crypto space itself. This is basically the rapid increase in meme coins that are being circulated in the market. Over the past few months, we've witnessed an explosion of meme coins being launched through various launch pads like Pump.Fun and Moonshot. These are the two most popular launch pads. These platforms have essentially made it incredibly easy for anyone, you, me, anybody, to create and launch tokens. This has essentially led to the market being flooded by thousands of these projects, or not even thousands, millions of these projects, right? While some of these tokens have gained popularity, but very momentarily, many lack real utility or any sort of long-term value. Uh, what we saw was a liquidity shift. Basically, capital moving away from legitimate utility driven projects to short lived and very, very speculative meme coins. And this has had a sort of dilution effect on the overall market. Um, so, to break it down, as a result, substantial funds that could have otherwise, strengthened uh, established crypto ecosystems ended up trapped in projects like these. And to put it mildly, these projects weren't going to last for long. So essentially, the oversaturation combined with frequent scams in the meme coin space resulted in tremendous negative sentiment and also fatigue among investors, further bringing the market down. We saw this with Solana, for instance. Solana became a sort of meme chain for a little while, and this had like a very negative impact on Solana's price as well. And actually, if you plot the chart from when tokens started getting listed on Pump.Fun, since then, Solana's price has been in a sort of sideways or even a negative decline, right? So these are just factors that need to be taken into account as to why we are in the position right now. But basically, in short, the crypto market's downturn is the result of a combination of economic policies, security concerns, and internal issues within the crypto space itself. Um, so the combination of tariffs, fueling inflation, major exchange hacks, and liquidity being, diverted towards these unsustainable projects has created a very challenging environment for the crypto space right now. Now that we've sort of explored why we're in this position, the next step is to look at the data points that could indicate where the market may be heading next. So let's just get into the main question right now of whether this bull market is actually over or not. Um, so yeah, let's go over and do this. Okay, so now, after closely examining the frameworks and also data points I'm about to share with you all, my answer is a definite no. The bull run is definitely not over in my eyes. Uh, One of the biggest indicators that suggest uh, that this is not over is something known as global liquidity levels. Now, if you've actually tuned into my previous webinars, you've probably heard me mention this before, but today I just want to break it down in detail because this is absolutely crucial for understanding where the crypto market is going next. So I want you all to really pay attention here, take down some notes as well. Of course, we will be addressing any questions that you have towards the end of the webinar as well. But this point that I'm going to be discussing right now should not be overlooked because there's a strong, strong correlation here. Okay. So firstly, let me just discuss what global liquidity is. Uh, Global liquidity refers basically to the overall availability of money and credit in the global financial system, globally, basically, everywhere. All right. Think of it as oxygen that fuels markets. When liquidity is high, assets like Bitcoin thrive, right? When it dries up, those same assets often struggle. Global liquidity, how is this measured now? It's typically measured through an indicator called the M2 money supply, which tracks cash checking deposits and easily accessible savings, right? Major institutions, financial institutions like the Federal Reserve in the US, European Central Bank, People's Bank of China, and the Bank of Japan as well, play key roles in actually determining global liquidity levels through their monetary policies. When these central banks actually inject liquidity or money into the economy through methods like quantitative easing or lowering interest rates, investors essentially gain easier access to funds. As a result, they tend to take on more risk, driving money into assets like cryptocurrencies. Now, why does this matter? Why does this matter at all for cryptocurrencies, right? I'm going to break that down now and show you a correlation that, to be honest, surprised me as well. But it is a correlation that matters nonetheless, right? And let me just go ahead and share the next slide with you all. All right. So here's the key takeaway I want all of you to be aware of. Bitcoin has one of the strongest correlations with global liquidity. In fact, research has shown that Bitcoin tracks global liquidity trends about 83% of the time, and this is higher than any other major asset class. Therefore, it's widely seen as Bitcoin being the purest sort of liquidity barometer in the financial markets. Historically, when liquidity expands, Bitcoin's price often rises. When liquidity contracts or reduces, Bitcoin tends to suffer. The correlation has been remarkably strong, with around a 0.94 correlation coefficient over the long term. While short-term price swings, right, can sometime, of course, break this pattern, combining this liquidity insight with Bitcoin's on-chain metrics, which we will discuss now, has consistently provided a powerful framework for identifying market cycles, right? Um, to illustrate this a little better, let's use some historical examples, and I'll walk you through some of these as well. Uh, Firstly, let's take the last bull run, the 2020 to 2021 bull run. During the COVID-19 pandemic, central banks around the world injected massive amounts of liquidity into the system to stabilize economies, right? The US M2 money supply, for instance, surged, right? It surged 26.9 year over year by February 2021. In the same period, Bitcoin rocketed from $5,000 in March 2020 to nearly 60,000 by April 2021. Um, the 2017 bull run, right? It had the same sort of expansionary monetary policies, which drove global liquidity higher. Bitcoin climbed from around $1,000 to almost $20,000 by the year end, tracking rising liquidity trends there again, right? Now, here's where it gets really interesting. While there are several ways to track global liquidity, one of the best resources available right now is bgeometrics.com. I want you all to take this down. Their chart provides a clear visual representation of global liquidity trends and how they actually relate or align with Bitcoin's price movements. Um, Over the past year, this liquidity chart has been the most important indicator for understanding crypto's price direction. It's very, very crucial to note this next point as well. The data often comes with a lag of approximately 80 days. So we can't expect as soon as liquidity rises, Bitcoin's price is also going to rise, right? So there's always that lag of around 3 months or so. Um, so to break it down, when global liquidity moves, Bitcoin and crypto tends to follow. Think of M2 as some sort of puppet master pulling the strings, and crypto basically dances to its rhythm, right? Typically with a delay of about 80 days. Right now, what we're seeing is that global liquidity is trending upward. And if we factor in that lag which I mentioned, Bitcoin's local bottom is might be already in, right? Now, while timing the market is always tricky, and I firmly believe in the power of actually being in the market longer or time in the market rather, this strong correlation indicates we could see a positive reversal in the coming weeks or by mid-April at the latest, right? Now, let's look at some other factors as to why I think the bull run is still in play. Aside from global liquidity, there's another compelling reason why I believe this crypto bull run isn't over yet, and that's on-chain metrics. Historically, before Bitcoin reaches a major market top, there are certain on-chain indicators that start flashing warning signals, right? These metrics basically provide insights directly from the blockchain, tracking network activity, wallet behavior, and overall market sentiment. In short, they help identify when the market is getting overheated or frothy, often signaling when a correction is due. And correction, I mean long-term, multi-year corrections, right? Interestingly, in this cycle, not a single major on-chain metric that typically signals a Bitcoin top has been triggered. Um, and honestly, if Bitcoin were truly on the brink of a multi-year peak, we'd expect at least one or some of these indicators to be flashing red. But the absence of this is a strong suggestion that there's still time left in the market cycle. Uh, Now, I want to focus on one particular on-chain metric that has a very impressive track record of accurately identifying market tops. It's called the Pi cycle indicator. Since this can get a little bit tricky, I'll break it down in simple terms here as well. And if you have any questions as well, please do reserve them, and I will be answering all of your questions after this. All right. Okay. So, what is the Pi cycle top indicator? Basically, it's a tool that uses moving averages, essentially average prices over a certain period, to predict when Bitcoin is approaching its peak. It specifically tracks two key moving averages. Firstly, it's the 111-day moving average. This is a short-term average which reflects Bitcoin's price behavior over roughly the past 3 months. Since it's more reactive, it quickly responds to shifts in momentum. Then the second moving average is a 350-day moving average multiplied by 2. All right. This is a slower moving average that's calculated by taking the 350-day MA and multiplying it by 2. This slower trend line basically smooths out price fluctuations, and it offers a clearer view of Bitcoin's long-term trend as well. Now, how does this work? The magic really happens when these two lines cross. Historically, whenever the 111-day MA crosses above the 350-day MA multiplied by 2, it has closely aligned with Bitcoin's market top. Often, it actually aligns within a matter of days as well, right? Um, the logic behind this indicator is essentially rooted in market momentum. During extreme bullish phases or euphoric phases, Bitcoin's short-term price action becomes highly aggressive and rapidly outpaces its long-term average. This sort of sharp acceleration often marks the final euphoric push before the market peaks and starts cooling off. Now, why am I such a fan of this indicator, right? It's simply because of its historical accuracy. The Pi cycle top indicator has successfully called multiple Bitcoin peaks. December 2013 predicted the top at around 1,100 before entering a bear market. Again in December 2017, this one was very, very accurate. It marked the peak near 20,000 just before the sharp decline. Then came April 2021. This didn't really time the top in terms of the 69K top at which occurred in November 2021, but it still signaled Bitcoin's peak very close to its high in terms of dollar value. So again, very close, right? The key point here, why is this relevant now? The pi cycle top indicator hasn't triggered yet. This is very crucial because if Bitcoin were at risk of actually topping out for this cycle, we'd expect this indicator, among others, to be showing some signs of overheated market. Uh, the fact that it hasn't is another reason to believe that the crypto bull run still has a lot of room to grow. This is a very important point as well that I want to discuss. Of course, no indicator is perfect, and relying on just one metric is absolutely never a good idea. But when combined with the absence of other warning signs and the positive liquidity trend I mentioned earlier, this outlook significantly leans still to bullish, right? So it's always a good idea to combine these metrics with your own thesis, with other charts as well. All right, cool. Now let's go on to, all right. I hope you all are ready with your questions. We will be going on to them very, very shortly. Um, Before we do that, let's just go out with the key takeaways before we move on. Uh, I want to again emphasize something crucial here. Understanding why this market has felt so exhausting is important. The truth is, many of us, myself included, expected a far, far more explosive bull run, given the powerful catalysts that uh, aligned towards the end of last year. The spot Bitcoin ETFs, Ethereum ETFs gaining approval, institutional involvement growing, on-chain fundamentals which looked extremely strong. It felt as though the conditions were set for a rapid and aggressive upward move. But we have to remind ourselves, right? Markets often have a way of moving at their own pace. It's essential to take a step back and recognize that the broader signs still point to us being in a bull run. The fatigue many people are facing and feeling doesn't necessarily mean the cycle has ended. It just means we're facing natural market cycles within a longer upward trend. Uh, this fatigue, I experienced it in the last bull run as well, and it almost shook me out of the markets. But that's essentially what the bigger whales want you to do. They want you to sell at the lows so that they have a discounted price and then they can sell your bags at a high, right? Uh, but the power of crypto and blockchain lies in the fact that all the data is there for you to see, right? You can go on to any of the block explorers or uh, you know analytical tools to find out where we might be in the markets, right? Um, One factor that has undeniably been a dampener, definitely in the recent months, is the impact of tariffs. This has created uncertainty and also suppressed the momentum. However, it's important to remember that tariffs are not a permanent fixture. Economic conditions change, policies shift, and the impact of such factors tend to diminish over time as well. Combine this with bullish indicators that we've discussed, positive global liquidity trends, on-chain metrics remaining stable, and strong fundamental growth. There's a solid argument that this bull run still has a lot of room to go. It's also crucial to maintain perspective when evaluating short-term price action. Multi-month corrections are common, even during bull cycles. In fact, they often shake out weak hands before the market resumes its upward trajectory. This is why tracking these meaningful indicators is very, very important. Uh, that said, no analysis is ever truly conclusive. The data points that we've explored today offer valuable guidance, but they require ongoing observation and also reassessment. Markets are dynamic, and staying informed here is essential to really making sound decisions. And we will be revisiting this as well. We will have a follow-up webinar on the bull run. Of course, we will have an updated webinar if we think the market is getting overheated as well, and whether it's time to actually have an exit strategy in place as well. So these are all update webinars that we will be conducting, but I would 100% encourage everybody to do their own research as well and continue reassessing all of these metrics that we have spoken about today. Um, so yeah, nothing in crypto comes easy. This is something that I want you all to take away, not even during a bull run. But the beauty of this space is that if you are willing to put in the effort, you are rewarded in ways that are unmatched by traditional markets. Uh, Patience, diligence, and adaptability are key concepts here, right? Cool. On that note, let's. All right, yeah. Just before we go on to the Q&A, I encourage everyone tuning in today uh, to join our active community across our social media channels. We post regular market updates there and various campaigns as well that you can get involved in, um, and specifically on our Telegram and Twitter. On Telegram, we also post regular future signals for you to catch a trade at an opportune time. Uh, Remember that this is completely free as well. We also have 80% success rates on all our trades that we have posted on our Telegram channel as well. So any traders, any futures traders here, do check out our Telegram and join our community as well. With that said, I think we can move on to our Q&A. Um, Let me see if there are any questions. If you have any questions as well, you can raise your hand and unmute yourself, and we can have a discussion as we go along. But let me also see if there are any. All right. Yeah, if you have any questions, just raise your hand. I think I saw one, but Ajit, did you have a question? Oh, Shaker, you had a question, right? Uh, yeah, please do unmute yourself, and we can get going. Okay, I don't see anyone, but okay, I see some questions that have been put on chat. Uh, Suryakant has a question about Pepe, Dogecoin, and Shiba Inu. All right, so these are all large cap meme coins. Meme coin sector has taken a hit for sure over the last this quarter, especially. Like I mentioned in the webinar as well, I think the meme coin narrative now is facing significant FUD or fear, uncertainty, and doubt simply because of the number of scams that have happened in the space. Um, so I would say if you're holding these coins, uh, keep it to a minority in your portfolio. Don't have too much leverage in play as well if you're a trader. But if you're a hodler or you're investing for the long term, uh, I hope you have other solid projects in your portfolio as well. But yeah, I mean, these are large cap meme coins with a very active community, so they're not going anywhere. Uh, all right. Guys, this is your chance to ask any question. Doesn't have to be about this webinar as well. It can be anything. It can also be about specific projects. It can be, yeah. Okay, so we have Pavan. Yeah, Pavan, you can go ahead and unmute yourself and you can ask your question.
Hi Anush, can you hear me?
Yes, Pavan, I can hear you.
Yeah. Thanks for all the insights.
Absolutely.
What's your view on Filecoin?
Okay, yeah.
Patience.
So,
Yeah.
I'm very bullish on decentralized storage. I hold some file and also another project called Arweave, which is a promising storage coin. It has very good utility, very good community backing as well. But right now, I think we're still in the sort of phase of the market where dominance is all in Bitcoin. If you see the dominance, Bitcoin dominance chart on TradingView, you'll see that most of the capital is still being centered around Bitcoin alone and not even any altcoins. But having said that, this is the time to position yourself in these sort of utility-based projects. So, decentralized storage is definitely a narrative that will be there because it's not just retail based, but enterprises where the real money is sitting will come into these sort of utility plays as well. And Filecoin is the biggest a decentralized storage coin and project. So it's a very, very promising coin, has very strong tokenomics as well. So yeah, those are my thoughts on File and you know, the whole decentralized storage space itself is a uh, very promising narrative to keep an eye on. Of
Okay. Thank you.
course, of course. Uh, any other questions? Feel free to just raise your hand and I will be answering them. I think there are more. Okay, I see. What about Solana, BNB, and Ethereum? Okay. Uh, Solana, BNB, and Ethereum. Now we're talking. Solana, BNB, and Ethereum are solid layer one projects. Solana, especially, I'm a major Solana bull. I think well, I don't think it's going to flip Ethereum this market cycle because that would require its market cap to be, a lot of money to come in for that to happen. But in terms of adoption, we can already see that Solana has surpassed Ethereum and BNB. And yeah, it still has room to grow for sure. Again, this depends on whether Bitcoin will definitely outperform or perform well in this market cycle. But these are fundamentally strong uh, coins to hold for the long term, not just for this cycle, for multi-year cycles. BNB, of course, is the largest exchange. They have a huge, ecosystem. BNB chain is also growing now. They have many use cases built on that chain. Ethereum, it's the leading altcoin. It's the first mover advantage. So Ethereum will always be there. It's a huge, huge ecosystem. Still the biggest ecosystem and largest number of projects that have been deployed are on Ethereum. So these coins are fundamental holds. I wouldn't say if you hold them, great, continue holding, and because they still have a lot of room to grow. All right. I think CASPA is okay. I see a lot of CASPA prospects for XRP. Okay, this is a good question from Ajit. Um, XRP and XLM. So these are these projects have been there for a while now. They have also witnessed several bull and bear cycles. So they have actually lasted in the crypto market. XRP has a huge, huge community, as they call it, the XRP army. Um, XRP and XLM, essentially same sort of technology. It's for remittance is their use case and utility. But they also have a huge narrative behind them now. Trump and is really endorsing US based cryptocurrencies, and XRP and XLM fall under that category. There are some rumors of whether if you actually hold XRP or XLM in the US, it'll be tax free. So there's no capital gains essentially, which is huge for investors in the US, of course. But this essentially drives the price up because have like some sort of positive momentum and narrative to get behind. So apart from the use case and utility of these projects, there's also this narrative in play now. So XRP and XLM, I would say XRP over XLM simply because it has a larger community. But if you're bullish on the remittance narrative, then these are the two biggest coins in that space. All right. I don't see any other questions. If you have any other questions, guys, just raise your hand and you can go ahead and talk, or you can also put it in the Q&A box and I will be able to answer them. Arun, yeah, I see your hand raised, Arun. Yeah, Arun, you can go ahead and talk. I think you are muted, Arun.
What about, hello,
Yeah, I
good
can
evening,
hear you
sir.
now.
What about AI coins?
Yeah, AI is a huge narrative. And so, in terms of the bullish sectors, let me just tell you which ones I have been doing research on. Layer ones is one because that's the foundation. And the second narrative, which I am extremely bullish on, and I'm seeing continued adoption, is definitely crypto and AI. AI in the traditional markets as well has been, outperforming as well, right, with NVIDIA as well. But in crypto, the of course, the volatility will be a lot more, but the upside is going to be tremendously more than traditional AI stocks, right? This is a continue, it's going to continue growing. There is adoption that's taking place in terms of just people uh, being onboarded onto these platforms. Uh, in terms of specific coins, I would say if you want a little bit more of a risk-averse strategy, go for the top coins like Render. Akash Network is a great one as well. But if you're going into more, low cap gems, there are so many AI coins that I can list. But if you're interested, I can even set up another webinar just for, uh, you know, just for the AI sector alone, because that's a huge, huge sector which has untapped amount of wealth that can enter. There's a whole narrative on AI agents as well, which picked up steam but now has come down. Could be an opportune time there. Uh, One token which I can talk about is Virtuals. I'm very bullish on Virtuals protocol. There's also another project called EOS Network, which is also has a good community backing as well. So these are some tokens which I am keeping an eye on. But in terms of AI tokens, I would say definitely if you can allocate a little bit of your portfolio into that sector. Yeah. I hope that answers your question, Arun.
Webinar है so Zoom में question पूछो मैं जो AI नो आंसर है
All right. Cool. Okay. I have a question about Coinset. So Coinset is a great way of actually getting started in crypto in a platform. Basically, what is Coinset? It's a sort of index fund. You can think of it like a mutual fund for crypto. We have different indexes that you can invest in. Say, for instance, you want to get exposure into the blue chip cryptos like Bitcoin, Ethereum, Solana, BNB, all in one shot. You can just invest in that basket and you get an allocation of those different cryptocurrencies, right? So essentially, you have a diversified portfolio in just one click. And it's very easy for beginners to get into the space without actually having to invest in these coins separately. Likewise, if you have a little bit more of a risk tolerance, you can go down the risk curve and actually invest in certain narratives like AI, for instance, or gaming or meme coins, right? So we have different crypto baskets which you can invest in. That's basically what Coinset is. All right, folks, I think that's all the questions here. Um, Please tune in to our webinars this week. We will have more this week and also next week. We will be talking more about how you can actually get involved with futures trading on Mudrex for the next two webinars. So please do get involved there. I really encourage you to join us for those sessions because we're going to be going deep into how you can actually start futures trading on our platform and also talk about some risk management strategies when it comes to futures. So on that note, everyone, thank you so much for joining me this evening. Uh, and until next time, happy trading, guys, and good luck.